Gold and silver were due a correction. They were absolutely due a correction. Where they do the correction we've seen, it's way overdone, especially in silver, but this is just another gut check. And you've got to ask yourself, why did I buy gold? Why did I buy silver in the first place? And if you have funds that are still in the banking system or still in the system, now is a perfect opportunity to get those funds out of the system, into metal, into your hands with no counterparty risk and no default risk. They had $65 billion in equity. Interest rates have gone up since then, and their bond portfolio has cratered, what, $300 billion or whatever? One, because the central banks are buying gold. They're buying it voraciously. And the other reason the price of gold has gone up or the value of currencies have gone down. The severity is going to be 10 on a scale of 1 to 10 because the credit crisis is going to be centered and probably start. So I get emails, I get phone calls, people nervous. Oh my God, gold's going down, silver's going down. Look at my mining shares.
Can we start there and talk about what is going on with gold and silver, especially over the volatility we've seen over the past several quarters?
Well, you're using the term volatility. Nobody used the term volatility on the way up. They only used the term on the way down. So I guess there's good volatility and bad volatility. I would say things probably now are less volatile than they were on the way up, because we were regularly seeing $3, $4, $5 days in silver. Now it's been a slow bleed of, $2, $3, 75 cents, whatever. But it's to the downside, so it's volatility that people don't like. Where we are now, we are in the bottoming process. This has lasted a little longer than what I had expected. But I want to tell people this is and we've had many of them since the year 2000, 2001, when gold and silver bottomed. We've had many gut checks, but this is just another gut check. And you've got to ask yourself, why did I buy gold? Why did I buy silver in the first place? Do you know why you own gold or silver? Do you own gold or silver because it was going up or because you thought it was going to go up? First off, gold and silver don't do anything. They don't go up. They don't go down. They are a piece of metal that we've been fooled into pricing in fiat terms, in dollars, in yen, in euros, what have you. The way it should be, the price should be quoted is right now, the dollar is 1/4,000th of an ounce of gold. 25 years ago, gold was 1/300th.
Volatility only becomes dangerous after prices fall, and that psychological trap costs investors more than market swings ever do. Bill Holter notes that gold itself hasn't changed. Only the purchasing power of the currency measuring it has, exposing a reality most headlines deliberately ignore. Temporary corrections often shake out conviction before larger trends resume, leaving patient holders better positioned than emotional sellers. Next, Bill Holter exposes why pricing gold in dollars hides the real collapse already underway.
If you look at gold as being priced in dollars, it's not as shocking that the price is going from 300 to 4,000 or 5,600, whatever the high was. But it is more shocking if you're looking at the dollar that's being priced by gold going from 1/300th to 1/4,000th. That's a complete and utter crash of what's the number, 93%, whatever, loss of purchasing power versus real money in 25 years. But yet, that's not the way it's viewed. It's viewed as, oh, gold's going up or silver's going up. And that's not the case. Getting back to the gut check, you need to go back to before the first time you bought an ounce of gold or bought an ounce of silver. Why did you do that? Were you worried about the finances of the U.S. government? Were you worried about the finances of the government, whatever country you live in? Were you worried about fiat melting down? Well, that's what has happened and has been happening for the last 25 years. So we get this pullback. People are pissing in their pants because 6 months ago, we are not even 6 months ago, 4 months ago, 5 months ago, we had much higher pricing or much lower pricing in the current currencies. Gold and silver were due a correction. They were absolutely due a correction. Where they do the correction we've seen, I think it's way overdone, especially in silver. But if you understand why you own the metal and what the purpose of having capital outside of the system, you should be able to relax a little bit.
Most investors celebrate rising gold prices without realizing they're actually witnessing their savings buy less every single year. According to Bill Holter, measuring the dollar against gold reveals a far steeper loss of purchasing power than conventional inflation statistics ever admit. That distinction matters because protecting wealth requires understanding currency depreciation, not chasing price charts. Next, Bill Holter reveals why today's correction may be strengthening long-term ownership rather than weakening it.
And if you have funds that are still in the banking system or still in the system, now is a perfect opportunity to get those funds out of the system, into metal, into your hands with no counterparty risk and no default risk. And that's the key, no default risk. We live in a world that is basically insolvent. I don't think there's a large central bank anywhere that is healthy. And I can say that because we know the U.S. Treasury / Federal Reserve are not in healthy positions. The Treasury now is paying $1.5 trillion in interest alone. That is the biggest category of spending other than, I think, Medicare. Or I'm sorry, not Medicare, but Social Security. It's bigger than defense. It's bigger than anything else. And it will only grow, especially if interest rates go higher from here. It's going to grow much, much faster. If you look at the Federal Reserve, they have a negative equity position at this point. I looked at it, I think it was 4 years ago, they had $65 billion in equity, and interest rates have gone up since then, and their bond portfolio has cratered. The number is what, $300 billion or whatever. So they've got a negative balance sheet. As far as other nations are concerned, what do they use? What do the other nations' central banks use as their primary reserve? They use dollars that are issued by an insolvent entity. So you're looking at a financial system literally with no foundation at all. And when this is all said and done, people are going to find out that the only monetary foundation you can have is something real.
Then, the world's largest financial institutions increasingly depend on confidence rather than balance sheet strength, and that's a risk most depositors never measure. What Bill Holter is highlighting is that soaring interest costs and weakening central bank finances create systemic vulnerabilities that cannot be solved simply by issuing more debt. Institutions continue encouraging trust in paper assets while quietly expanding their own hard asset exposure. Next, Bill Holter exposes why reserve currencies ultimately depend on confidence they can no longer fully justify.
Now, it doesn't have to be gold, doesn't have to be silver. It could be a commodities basket like the BRICS are proposing. But in that basket, they're proposing that 20 to 40% of that basket be gold. And then, of course, silver, and they're going to have oil, etc., etc. But the bottom line is we've been living in, a fantasy world for however long, because the currencies are nothing. The currencies are, they have no backing other than from the issuer, and these issuers are insolvent.
I wanted to tag on to something that you just mentioned about the preponderance of dollars as a reserve asset holding of foreign central banks. We're going to put a link in the description of this video to an article that just came out in June saying gold overtakes treasuries as the #1 holding of foreign central banks.
For two reasons. One, because the central banks are buying gold. They're buying it voraciously. And the other reason the price of gold has gone up, or the value of currencies have gone down. That's why gold now is a larger percentage of dollars. But there's a lot of governments out there that don't own gold, that still have 100% of the reserves in dollars. An example: I lived in Costa Rica for 5 years, from the end of 2006 to 2011. And by 2010 or 11, I'm thinking to myself, okay, so this country's 100% dollar reserves. When the dollar melts down, what's going to happen to the Central Bank of Costa Rica? It'll be total chaos. So again, going back to the financial system needs a real foundation.
Central banks publicly defend fiat currencies while steadily replacing them with more gold on their own balance sheets. Bill Holter's argument suggests the contradiction isn't accidental. It reflects growing recognition that reserve assets backed only by government promises become increasingly fragile during debt cycles. Retail investors are told diversification is enough, while sovereign institutions are quietly redefining what constitutes real reserves. Next, Bill Holter unravels why official confidence in paper money conflicts with central bank buying behavior.
And there's no foundation. And the derivatives have built up, dramatically since the 2008 great financial crisis.
The other thing you mentioned earlier was people asking you, and I get the same question from subscribers, from viewers on an ongoing basis every month: when will the dollar collapse? When will the dollar collapse? And I go back to a interview you did with the late, great Jim Sinclair, your former partner, and the title of your interview was "When is Now?" And when they say, when will the dollar collapse? You just gave us the comparison of getting our heads on straight about whether we should be talking about the price of gold or the price of the dollar. So the price of the dollar, you mentioned, from a few decades ago to now, but when the foundation of when FDR issued his executive order calling in gold coinage in 1933, as you know, the dollar was defined as it was 120.67, approximately 1/20th of an ounce of gold. And now at 1/4000th ounce of gold, the dollar has collapsed by 99.5% in gold terms since that moment. So when people are asking, when will the dollar collapse? And you keep saying, if you can't see it, I can't help you. But this is human nature. We have to be patient with people, because this is the bewitching sleep spell that had been put over us. And when things are happening on a gradual enough basis, people keep looking in the wrong, they're being told to look for the wrong unit of measure, rather than realizing that gold has been, is, and will always be the unit of measure. Any further expounding that you want to do on that?
No, I think that pretty much sums it up right there. I mean, gold is the measuring stick. If you look at the Dow Jones or the S&P 500 in terms of gold, it's not even close to an all-time high.
History rarely announces a currency crisis with a single dramatic event. It unfolds through decades of declining purchasing power. This is where Bill Holter's thesis shifts from forecasting collapse to demonstrating that much of the damage has already occurred in gold terms. The real timing mistake isn't buying metals too late. It's recognizing monetary erosion only after confidence finally breaks. Next, Bill Holter reveals why measuring wealth in dollars disguises the crisis already unfolding.
The severity is going to be 10 on a scale of 1 to 10, because the credit crisis is going to be centered and probably start. If it doesn't start, it doesn't matter. But once it gets to the U.S., that's it, because the dollar is the world's reserve currency. The U.S. treasuries are the foundation for basically the entire financial system. So this is not my opinion. This is math. The debt is going to fail. Now, with that in mind, if you know and I've told people this for the last probably month or 2 months, I get emails, I get phone calls, people nervous. Oh my God, gold's going down, silver's going down. Look at my mining shares. If you know what the ending is, you prepare yourself for the ending. Does it matter how you get there or what it looks like? You prepare yourself for that end, because as you just said, what the uses of gold and silver, the uses of silver are to get you to the other side once credit collapses. And the use of gold is so that you have capital when the system begins to reboot.
Wall Street celebrates nominal stock gains, even when those gains disappear, after measuring them against real money. Bill Holter notes that gold functions as the benchmark, exposing whether wealth is actually increasing or merely keeping pace with currency debasement. That perspective transforms market volatility from something to fear into something to evaluate with greater clarity and discipline. Next, Bill Holter exposes why surviving the reset requires preparation long before panic begins.
You become a mini bank, if you will. You have capital when most, 99% of the other people don't have capital because they got wiped out in their credit-based investments. Now, you could say stocks are not credit-based. You could argue it either way. It doesn't matter. What I'm getting at here is you can have great stocks held at a broker that goes out of business, and guess what? You find out that legally those stocks were never yours. They were for your benefit, but they were owned by your broker. That's why you get the stock certificates. Jim Sinclair sounded like a complete, stark, raving mad lunatic in 2004, 2005, telling people, get your stock certificates. And then 2007-8 came along, and we were 3 hours away on a Sunday morning or Monday morning to markets not opening and the whole thing melting down. Get out of the system. He was early, but he was right. And now the governments have codified that by saying, if you put money in a bank, you're not a depositor, you're a lender. If you put money into a broker, those stocks are owned legally by your broker for your benefit. Go into court and see how far you get suing a bank or suing a broker that took your funds to save their own ass.
Sovereign ownership and individual ownership of gold. Do you have any insight for us on, for example, China or India or other Asian countries where there's been a cultural affinity to precious metals forever?
Most investors believe ownership begins with an account statement, yet legal ownership can become far more complicated during financial stress. According to Bill Holter, reducing counterparty exposure matters because contractual claims and direct possession are fundamentally different when institutions fail. That distinction rarely matters in calm markets, but it becomes decisive during periods of systemic disruption and frozen liquidity. Next, Bill Holter reveals why Eastern attitudes toward physical gold differ sharply from Western financial assumptions.
And their governments are actually encouraging their individuals to own and have investment accounts where they own physical gold and own it personally.
You just basically described the BRICS. That's the rest of the world. The BRICS, that's what they want. They want free, fair, and honest settlement for trade. If they send a widget, they don't want dollars in return because they're giving a real widget for fake money. And I'm not just picking on the dollar. The euro, all these countries, it's all fiat. This is coming to a head Socially, it's coming to a head. Financially, it's coming to a head. Geopolitically, it's coming to a head. Everything is coming to a head, and they have depressed the price of gold, depressed the price of silver, and they're telling you that is not the exit. And if you understand why you bought gold, why you bought silver in the first place, then you understand it absolutely is not the exit, but it's the only exit. People think, oh, well, when this thing happens, I'm going to be out the day before or 4 days before because it's 3-day settlement. It'll get cleared, and I'll be in the position I want to be in. Nobody's that smart. Nobody's that nimble. I would say your odds of that working out correctly would be the same odds as winning a lottery ticket. And that's why I said earlier, if you know the ending, prepare for that ending now. Prepare for that ending ahead of the end, because once it gets here, you can't move. You will not be able to buy gold. You will not be able to buy silver with fiat money. You'll be able to trade it for stuff. If you want gold, well, here's a car, or here's a piece of property. I need gold. Do you want to take my property? That'll still work. But at some point in time, for a spell, fiat currency will not be accepted for real money.
Governments encouraging physical gold ownership or promoting confidence in fiat currencies creates a contradiction few investors stop to examine. What Bill Holter is highlighting is that nations preparing for alternative settlement systems are responding to long-term monetary risk, not short-term market noise. Waiting for official confirmation usually means reacting after institutional positioning is already complete.